Hey guys, what's up, how's it going? My name is Rob and welcome back once again for today's video. Inside today's video, I'm going to be showing you guys two Canadian stocks I'm going to be buying and adding inside my Canadian dividend-based portfolio. We're going to do some cleanup inside my portfolio. I'm going to be selling some older ETFs that I bought way in the back of the day, and I'll be kind of buying some individual stocks with that. So if you guys want to follow alongside with me and see how I'm kind of doing this, be sure to watch this video. So again, the format's going to be pretty simple. I'll give you guys a quick little update on how our Wealthsimple trade portfolio has been doing. Then I'll jump in, I'll show you guys the ETFs that I'm selling, and then towards that, after that, we'll jump in and I'll show you guys the two stocks I'm going to be buying today. We're going to be focusing on high growth dividend stocks, so like stocks that have a lot of potential to grow in the future, as well as increase those dividend yields. So that's going to be the main focus for the stocks I'm going to be focusing on in today's video. So like usual, if you guys enjoyed this video, please be sure to give it a big thumbs up if you guys like the content. Really helps the channel out. And if you guys want to follow alongside with me as I build out this dividend-based portfolio each step of the way, be sure to subscribe to the channel. Alright, so let's jump inside our portfolio and let's see how our stocks are doing this Wednesday morning. Alright guys, a quick little update on the portfolio before we jump in and I'll show you guys what trades I'm making today. So we have the TFSA here, just almost approaching $29,000, so close to getting our TFSA max out. We're slowly getting there. Our stocks are up $90 in the past day. That's this morning. So Wednesday morning, the stock market kind of bumped up there. We're kind of experiencing the stock market on a little bit of growth over this past, I would say, couple months. You know, this year we started off pretty strong, and it looks like the stock market, Canadian stocks, and it looks like the US stocks are starting to recover and actually have some growth this year. So it's looking pretty good for us. Over the past week, we were up 1% inside the portfolio, which is $300 almost. So it's $300 gain in the past week from our stocks. Over the past month, we're up 3%, which is $725. And over the past 3 months, we are up 9%, which is $2,377. And as you guys can see, it really does start to add up as you grow your portfolio, you add more money in. You know, these percentages don't seem like a lot, like 9%, 10% doesn't seem like a lot, but when you have a bigger portfolio, that can be a couple $1,000s, and it definitely does add up. Over the past year, we're up 15% inside the portfolio. That's $3,700. Pretty solid, and I'm pretty happy with that. And again, we can just see that growth slowly happening. And then all time, we are up 14%. So a little bit down all time, but still at the end of the day, pretty solid inside the portfolio. So let's focus on the ETFs I'm going to be selling today, and then we'll jump inside the stocks and I'll talk about what I'm buying. So the first thing we're going to be talking about is these two ETFs here I have. The first one is VYMI and the second one is XRE. So VYMI is a Vanguard International High Dividend Yield ETF. It's basically like a global based fund that has a bunch of stocks over the place, and it's traded in USD. So the big thing about this fund is I bought it when I first started this portfolio because I wanted some international exposure, but I didn't realize that I didn't really need too much because I already have another account with Wealthsimple Investor where I have tons of exposure. So the only thing I really want inside this portfolio is US stocks and Canadian stocks. So I stopped buying it, and the other big thing is it is traded in USD, so you do get hit with conversion fees with Wealthsimple Trade. Now this ETF has been doing pretty good since a lot of the international stocks have recovered. We're up 8%, so I'm probably going to sell it today, and then I'm either going to stick it into VFV or something like that, and that's probably what I'm going to do with that. And then we'll take XRE, which is our Canadian-based REIT ETF. Now we could hold this if we want. It's a fine ETF. But again, I want to kind of clean up the portfolio. I kind of want to put it in some individual stocks. So I'll probably put it in like something like a RioCan or something like that to kind of more specifically kind of get things down a bit and just kind of clean up the portfolio, because I don't want to have too many ETFs. I kind of want to just hold my main ones, which is VDY and VFE, and then put everything else into individual stocks. So I'm going to sell those stocks really quickly, and then we'll jump in and I'll show you guys what stocks I'm going to be buying in today's video. Alright, so the first stock I'm going to be focusing on today is going to be one of the best growth stocks I have inside my portfolio, and that is Canadian National Railway. And Canadian National Railway is a railway company, and the cool thing about it is it's a nice way to diversify your portfolio if you have a lot of financials or energy stocks like I do. So this is a cool way to get like a railway company that's a little bit different, that works more on the economy side and really is like the backbone of the economy. Pretty much, you know, all freight, a lot of the stuff that Canada uses gets shipped through Canadian National Railway. So it's so important to the economy and whatnot. And this is a stock that has been consistently growing on a regular basis. If we go for the max all time, we can just see that Canadian National Railway just keeps growing and growing. If you guys don't know, the ticker is CNR on the TSX, and it's currently trading at $146, which is pretty high. But again, this is one of those stocks that's just going to keep growing because of how valuable it is. They have a market cap of $104 billion, as you guys can see, and they do have a small dividend yield of 1.67%. Now, that's a pretty small yield, but the main focus here is going to be on the growth of those yields. So let's take a quick peek at the return, and let's look at some of the stuff that I think is really interesting about this stock. Alright, so the first thing we're going to focus on is the return of the stock, because I think this is always important for investors to see how has the stock performed long term and how has the stock performed short term. So long term, we've seen that the company has just been growing really well, and over the short term, let's take a peek at the last couple of years here. So I'm using an app called Simple Wall Street. This is a paid app. There is a very basic free trial, but I'm going to just use the paid version because it's really easy for me to show you guys how, especially as a dividend investor, how this stuff grows over time. So if you go over the past year, CNR stock is up 33% in stock appreciation. If we go over the past 3 years, it's on average about 54%, and over the past 5 years, it's up 80%. So quite a bit of growth over the past 5 years. That if you average it out, that might be like, I don't know, it'd be like 12%, maybe 15%. I'm not good with math, but it'd be over 10%, which is pretty good just for stock appreciation. So again, this is a really growth-based stock, but the cool thing is, let's take a peek at the dividends. If we reinvest the dividends, you can see the return all of a sudden jumps up quite a bit. And the cool thing about this stock is the fact that not only is it growing really well, but it's also increasing its dividends at a very solid rate. I downloaded this cool little chart off Guru Focus that I'm going to show you guys in just a second here. And we can see the dividend growth rate here. So I'm just going to zoom in here a little bit so you guys can see. But you can see over time that the 5-year growth rate for CNR stock is 12% per year. So, that 1.87% doesn't sound like a lot of money, but 12% per year is quite a bit. So, imagine that yield just growing by 12% every single year. And because they're still in that growth phase, I think this company has a lot of potential to grow. And one last thing we're going to look at really quickly before we move on to the next stock is the payout ratio, because we want to see how much income this company is making and how much, do they have a legal way to basically grow this dividend over time. As a dividend investor, we want to make sure they can keep that growth up. So let's take a peek at the payout ratio and let's see how they're doing with that. Alright, so if we head on over to MarketBeat, we can see some very basic information about CNR's payout ratio, which is important to see. So we can see that their most recent dividend was on, I guess, in December. It probably is in March because it's not updated yet. Their annual dividend yield is $2.3 Canadian, so you get $2.30 per share that you own, and it ends up being a 1.5 to 1.8 yield. Keep in mind that sometimes this website is a little bit delayed on dividend payments, so it's always best to check in real time if you want to know specific numbers. But their payout ratio over the past 12 months has been trailing at a 46%, which is relatively low. I think companies in that 30 to 40% are definitely companies that can really bump it up and are really attractive. Like if you see like a stock like TD or something like that that has a very low payout ratio, that just shows you guys, in fact, the next stock we're going to talk about has a very low payout ratio. It just shows you guys that they have tons of money, tons of room to grow that dividend over time. So if you invest in the company, it's more than likely that that dividend is going to keep growing over the next couple years, 5 years, 10 years. So once again, we can see that the payout ratio is really good. Their cash flow isn't as good, but that's okay because obviously, things are going on and whatnot, and there's development happening and different things like that, and it's just the pandemic. But the main thing to keep in mind here is the earnings. How much are their earnings and how much are they paying that out? And you guys can see that their most recent increase actually happened in 2021. They increased their dividend by 4%. So we've already seen an increase for this year. So once again, that's very good news for CNR stock. And if we hop inside Wealthsimple Trading and I show you guys my holdings for CNR stock, I'll show you guys that I currently hold 3 shares of CNR, which is a total value of $440. My all-time performance is up 6.22% since I bought it earlier last year. And once again, it's just been doing really well. So I want to buy a couple shares today. I have $452 from the ETFs that we've sold. I bought some RioCan. I bought some VFV, so I'm going to be putting the rest of the money in the 2 stocks that I'm going to be talking about today. So I'm probably going to buy about maybe 1 share of CNR stock, and I'll put the rest into the next stock I'm going to be talking about. So we'll put that order through, we'll buy some CNR, and let's talk about our second stock we're going to be buying for today. Alright, so the last stock we're going to be talking about today is a stock I've been blabbering about on this channel for quite a while, the past couple weeks to month or so. This is because this is a stock that I think is just doing really well and has a lot of potential in the future. So this is Elementation Couchstart, And this is a convenience store company based out of Canada. They do have stores all over the place. As you guys can see, they're expanding in the United States, Mexico, and a bunch of international countries as well. So not only are they really popular in Canada, but they're also growing around the world. And they've just been a company that has been growing really well. So they trade on the ticker ATD.B, which is a little bit weird, but that's just how it is. They currently trade $41 Canadian. And we guys can see that they have a dividend yield of not even 1%. So as a dividend investor, I'm going to show you guys in this video why that's it's obviously on the lower side, but there's a lot of potential with the stock. So let's take a peek at the stock. We'll look at the growth. We'll look at the reinvested dividends. I'll show you guys how well it has been doing over the past couple of years, but just take a quick peek at this chart. We can see here that they've had some pretty consistent growth over the past couple of years, and they've slowly been growing over time. And if we go over here on Simple Wall Street, once again, and we go down to the section where we can see the growth of the portfolio of the stock, we can see that over the past year, they're currently up 16%. So 16% recovery since the pandemic, which is pretty good. And over the past 3 years, they're up 60% with reinvested dividends. And then over the past 5 years, they're up almost 50% with reinvested dividends, including the pandemic. So that's pretty good, pretty solid, pretty good growth. But once again, the main focus in this video is dividend stocks that have big growth, but are also growing their dividends. So in the future, they will become good, solid dividend stocks, plus a lot of growth potential. I think these are some of the best stocks a lot of beginners and a lot of people don't pay attention to. A lot of potential here. So if we look at the dividend history of this company, you guys can see here that, and this is the big thing about this company, they have an annual dividend increase over the past 5 years that's almost in the 20% range. You guys can see here that on this cool little website called dividendhistory.org, you can type in the website and you can see the recent increases. Now I just got a couple here for the past 5 years, but this will just show you guys an example here. So in 2016, they raised their dividend by 15%. Really solid. In 2018, they raised their dividend by 11%. In 2019, 25%. Into 2020, they raised it by 21%. So you guys can see just consistent, solid, good dividend growth. So if you buy the stock today, your dividends will increase by 20% on average per year. If they keep increasing it. And if we look at some of the things like their financials and whatnot, now the company does have a lot of debt because they are borrowing money, they are expanding and whatnot, and that's understandable. But the earnings have been steadily increasing, which is always a good sign. And if we look at their payout ratios, we can see here that their most recent payment was on, this is obviously not updated. So again, you're gonna have to, it's important to kind of find some recent information if you guys can. But their annual dividend yield is about 22 cents Canadian. It's about 54% dividend yield, and the payout ratios are down between the 10 to 11%. Now this might be a little bit higher now, so again, double check that to make sure. But I just want to show you guys that their payout ratio is relatively low, like 10%, 12% payout ratio. It's absolutely like nothing. It's almost like they're paying out nothing, right? And so this goes to show you that's why they've been able to increase their dividend yield so much, is because they have so much free cash that they're like, okay, whatever, So that's the cool thing about it. And that's why, over time, they're able to grow their dividend yield. And if you're going to rely on a company to grow their dividend income, look for the ones with the low payout ratios, look for the ones with the high growth, because they're most likely going to be doing it no matter what. You could have a pandemic, but because they just have that free cash flow, they can increase it. And you guys can see their most recent increase was actually in 2020. So again, you want companies that are regularly increasing those dividends over time, because in the long term, especially inside a TFSA, it really does add up. So once again, if we hop inside the One Simple Trade account, we can see our performance of Elementation Couchstart inside my portfolio. Once again, this is a stock I've recently just started buying, so we don't have a lot of shares. We just have 3 shares. It's only $100, and we're kind of sitting around that 0% as it's going up and down and whatnot. We definitely need to buy some more shares of this company. So I think today we're going to go a little bit higher, and I'm going to be buying $200 worth of this stock, and that's going to end the stocks that I'm buying for today's video. So once again, just to kind of recap here, the 2 stocks I think are really good buys right now and good to add inside your portfolio are CNR stock and Elementation Couchstart. Those are the 2 I think are really good in terms of growth, and those are the 2 stocks that I've been adding inside my portfolio in today's video. I'm going to be taking the rest of my money I have here and probably putting that into RioCan, because I did have that in that XRE ETF, and that's probably what all the trades I'm going to be doing in today's video. And to give you guys a quick little recap on the goals of the portfolio just for the future and whatnot, when I first made this portfolio, the main focus was once again to kind of get that nice dividend income and that dividend passive income coming in inside on a regular basis, on a monthly basis and whatnot, and our TFSA is pretty close to maxing out. So I just kind of want to tidy things up. I want to kind of get things set up. I want to put a little bit more growth inside the portfolio for the future, because remember, the TSA will definitely grow a lot more into the future, and anything you get will be tax-free, specifically the Canadian stocks. So I really want to get a little bit more growth, and that was kind of the purpose in today's video, and we are reaching it, maxing it out. So going in the future, we're definitely going to be starting a new account, a new personal account, but we'll just kind of put everything together in the end, and I'll still do the calculation so you guys can see how the portfolio is growing. But other than that, guys, thanks for watching today's video. Hope you guys enjoyed it. Like usual, if you guys enjoyed it, give it a big thumbs up. If you guys have any questions, feel free to leave them in the comments, and I'll try my best to get back to you guys. But other than that, thanks for watching, guys. Take care, and I'll see you guys later.